what your risk parameters are as to whether you want to stay in during this whole run. But obviously, if you can, it's nice to be able to, in currencies especially, stay with the trend, stick with the trend until it obviously has played itself out. When you get to the Canadian dollar, you currently have a situation here that looks very choppy, moving sideways. It had a couple of trends early where it came down in the October time frame, somewhere in there in the fall, but since then has gone pretty much sideways. If you were to trade the Canadian dollar today and use the predicted highs and lows breakout situation, you'd be in a situation on the far right hand side of the chart where you would have to be looking for a short entry at around 96. Depends again a little bit on how much risk you want to take, because if you look at the predicted differences down below, you don't have a lot of significant movement there that indicate direction. We have a few clues, we don't have conclusive clues. You can also trade, as I mentioned before, with the Japanese yen. You can trade it in the pairs market, US dollar versus the Japanese yen. Again, you might want to say, okay, so what's different between that and the contract that we looked at before? We're going to look at the properties here, and to show you that, well, here we're talking about 100,000 US dollars as the size of the contract. The PIF value is $8.50, which, as you recall, is somewhat different than the $12.50 that we had for the just the Japanese yen futures, which is basically Japanese yen versus the US dollar, in a different convention entirely in the futures market than it is in the cash market. Now, you'll also, as you go along, maybe I should drop back here once and just to show you a little bit about the Japanese yen. Like the Canadian dollar, where we said the opportunity might be on the short side, here you're looking at, because the recent trend has been down in the Japanese yen, you're going to be looking towards the breakout. You're going to be looking, you're not trading it, but you're going to be looking to the possibility of the market moving above. And remember, after a trend, this market could go sideways for a while, and that's just the way it works. That markets are going to go sideways. You're not going to get any conclusive evidence one way or the other, for a while. So you have to kind of, keep your ammo dry. Then when you're ready to go, have your positions in place, your stops in place, and jump on the market when it does make the turn that you expect it to make. Eventually, it's not going to happen again a lot of times overnight. I think that, as I mentioned before, take a look at the US dollar. I mentioned before the breakout in the euro. Well, you have the same kind of a breakout in the US dollar situation, but to the upside. If you're looking at the US dollar today, you do not have a lot of conclusive evidence, and the weight of the evidence that you do have indicates that the market is still headed lower. We have the predicted medium-term moving average, the blue line, has crossed below the actual 10-day moving average. We have a weak situation with the predicted highs and lows. You have this high here below the previous high, so just from a strictly chart analysis standpoint, you have some weakness. You have the predicted differences are weak. You have the predicted neural index is weak. So at this point, we don't have a lot of reason to suspect that the dollar is going to turn. But as I said, we are looking short term. This is a short-term forecast, and that could change rather quickly, and it quite often does, as you are well aware. Let's see. Okay, now I think we'll switch back to the presentation software, talk a little bit more about some of the things that you need to look at to wrap up the webinar, and to keep in mind some of the things that, when you're talking about trading, what you have to watch, especially with the currency markets. First thing you have to be aware of is, of course, is it very well that whatever news events are on the television screen. Okay, looks like I had a little blip there, but as I said, just to review, it looks like you have to be in a position where you're able to react to a number of different influences if you will, and you have to not only hear the news, get the news, timely fashion, but you also have to be able to interpret, what does this mean? How will this affect the dollar? How will this affect the other currency that I might be trading? What's the effect on the pair? Everyone knows that the dollar right now has its potential weaknesses, but look at what it's going against. There are not a lot of alternatives. You have the euro that is, thinking about, they may, like the U.S. dollar, we've had to rescue auto companies and other with stimulus funds. Well, the euro may be in a situation where it has to rescue whole countries like Greece, and there could be others that are in trouble there. So they have their problems, they have their issues. And so the euro isn't necessarily, an automatic assumption as being the alternate currency for everyone. There probably will be currency issues that will come up. You will probably hear more about China's involvement in the currency market. You will probably hear more about the Arab discussion of having their own currency or developing their own currency like the euro in which to price markets. There'll be a lot of things that will happen in the currency markets. It's just a matter of being aware of what they are, keeping aware of the political situations, knowing, again, that you also have to protect yourself for those shocks or those risks when you don't know what's going to happen. Those are unknowns. Nobody knows what could happen, and they could, you have to always not overtrade, but always be prepared with your risk guidelines so you don't get in trouble. After you've done all that, you need to know like the types of contracts you're going to trade: cash, Forex, futures. Which ones are you going to trade? What size lot do they have? Then you need to have the right tools to help you trade effectively, because it's hard, I think at least, that for the currency market sometimes to grasp all the stuff that's going on. So you need to rely on some kind of a program, a software type of program that can show you, technical analysis signals as what lies ahead. I do have another question here I want to ask, and that is, if you remember that little man at the lower left-hand corner, I believe the value of the U.S. dollar index will be higher at the end of 2010 than it is today. Now, if that describes what you think, if you think the dollar is going to go up and it will be higher, I agree. Okay, we're getting some I agrees. So we're looking at some kind of a more of a bullish feel on the dollar, and that's kind of the way the situation is right now. Some people are thinking, I don't know that we're going to go back to the 120 level that we had early in the decade, but some people are thinking that the dollar is going to remain strong simply because it's the best of the paper currencies. And paper currencies, of course, as you know, are all a little suspect, but the dollar at this point